Hey soldiers, hedge fund manager Michael Burry, who became somewhat of a household name after the movie The Big Short, he has, with the exception of one stock, liquidated his entire portfolio.
We are selling to willing buyers at the current fair market price so that we may survive.
We're going to talk about why he did that, and we're also going to talk about the stock that he held on to. And it's very interesting, this one particular stock, it's very, very interesting what this says about his prediction about what's going to be coming in the United States of America as this economy continues to struggle. Okay, guys, before we get started, I want to mention the last video we did on Michael Burry. Listen, I'm from Baltimore. I have an accent. So if I say Burry, then deal with it, okay? I have a regional accent. I haven't gone to journalism school to get rid of it, and I don't intend to. In any event, Michael Burry, who runs the Scion Capital Hedge Fund, has done something few of his peers would consider doing. He has traded in line with his statements. And according to his just released 13F form, we'll talk about those forms in just a minute. They're important. According to that form, the famed investor has liquidated his entire portfolio, which, as of March 31st, 2022, had a notional value of just over $200 million. And instead held on to just one stock. What stock did he hold on to, I wonder? Well, it's a private prison stock. It's called GEO Group or GEO Group, which he had previously invested in, but had dumped all of his holdings at the end of 2021, only to sport a modest 3.3 million or 501k share position as of June 30th. GEO Group is the only stock that he held on to, according to his 13F form, as of the end of the second quarter. Okay. Now, these 13F forms, let me say something about them real quick. We're long-term investors here. The 13F form can help you in your due diligence because certain individuals are required to file these forms in order to let you know how they traded in the previous quarter. Okay, so we've talked about members of Congress. We've talked about gentlemen like Burry, Buffett, and others. Now, let me caution you. They only are required to file this once a quarter. So this is not a play-by-play of what they are doing. However, it can provide you with some insight if you are researching a certain stock and it just so happens that one of these individuals may also own it. That could provide you with additional insight and in doing your due diligence. And to that point, it's unclear when during the second quarter Burry liquidated his entire portfolio. The 51-year-old investor rose to prominence after winning a wager against mortgages in the run-up to the 2008 financial crisis. The outspoken anti-liberal has since become a cult figure on social media with ominous predictions of a looming downturn. In a May tweet, he raised the specter of a crash similar to the one 14 years ago. I also want to pause here and let you know that I was doing some thinking today, and I want to be clear about the purpose of this channel. What I hope to bring with this information is somewhat of a path for people to solve the money problem. There's actually a great channel by that name. He focuses on Tesla. But I want to solve that problem, okay? I don't want to have to be in this mode where I'm constantly on the Serengeti, okay? And what I mean by that is you see the cheetah chasing the gazelle. He has to do that every single day. That's why the cheetah cannot think about building spacecraft or contemplating the mysteries of the universe or considering his own mortality or consciousness. That's why they're just focused on that one thing. We have to be focused on more than that. The purpose of the channel is to put you beyond the day-to-day worry about money. Okay, so I just wanted to add that as an aside. Now, going further here, why did he hold on to that one private prison stock? Well, I think it's simply because he believes that incarceration is going to become a bigger business than it already is. Now, I don't personally, this has nothing to do with what you might decide to do. I don't like the idea of privatized prisons. And the reason I don't like that is because they make money in the same way hotels do. So a hotel can't have too many vacancies if they want to make money, right? I had always said that if people want to run these private prisons, there should be some metrics attached to their compensation from the government. Okay, so for example, if you're realizing a great degree of recidivism, or people who were convicts getting rearrested and going back into the system, then that should be a gig. That should be, counted against the private prison, and it should affect negatively their revenues. I know this sounds crazy, but I think private prisons should be in the practice of trying to put themselves out of business by, especially with the non-violent offender who has only offended once, maybe twice. There should be a lot of rehabilitative aspects to the penal system, but that's just my personal philosophy about it. But prisons make money. Private prisons make money based on occupancy. Okay, now a lot of people in America will say, America has 25% of the world's prisoners. And the NAACP, they came up with that figure years ago, and it's pretty much stayed the same. However, one thing that people never talk about when they discuss that, it's like, okay, China does have a larger population, but China has a greater predilection toward the death penalty than they do to imprisonment. So it might stand to reason that for a long stretch of time, maybe take 2 to 5 years, you'll have fewer prisoners in China because you have more executions. All right, so he has decided to stay in that, and I think that when we look at the data, I mean, Minnesota's violent crime rate has increased about 21% over the last couple of years. We got New York City with a 50% increase in violent crime in the subways alone. I know here in Baltimore, in this area, we've got more murders, unfortunately, than we do have days that have elapsed in 2022 as of the 15th of August. Hopefully that number will decrease and stop. But I think that Michael Burry sees, number one, a return to stricter law enforcement. You already see San Francisco had that DA that they recalled. Right here in Baltimore, the young lady, Marilyn Mosby, very liberal DA. She was a state's attorney, with all of her high-minded, newfangled methods of prosecution. She's out of there. She was voted out. Okay, so we could be seeing a change, and I think Michael Burry understands that. Now, along with this, while all of this is occurring, we are also dealing with, as a nation, nearly half of all Americans are falling deeper into debt as inflation continues to boost costs. Okay, so these are some of the headwinds that Burry is looking at, and helped him make that decision to go ahead and sell. Now, why did he sell? What's the strategy there? Is it just fear-based? Absolutely not. What he's doing is forecasting this 53% drop, which is what he said that he thinks is going to happen. Now, if he's in cash, of course, that will allow him to buy back at the market lows. Once everything goes on a deep discount, he'll be able to get back in, exercising the tried and true strategy of buy low and sell high. But we're looking at Americans that have got a lot of stress on them. And guys, I want to talk to you about this because with inflation hitting a 40-year high in June, Americans are struggling to keep up with the rising prices and putting less money aside for emergencies or long-term financial goals, several studies show. Americans' overall satisfaction with their financial condition now stands at a 12-month low, and 43% of consumers expect to add to their debt in the second half of this year. Higher prices have taken a a toll. Now, I know that you have some stress on you. I do too, in terms of having to spend more money and dealing with the prospect of having less money to purchase assets. You got to look at your expenses. You got to trim where you can reasonably in order to keep some money to purchase assets. And the reason why this is so important is because these are the times that wealth is created. We just talked about how Burry is situating himself and the Scion Fund to buy back at market lows. Assets are going on sale. If he's right, 53%, and he's just talking about the stock market. Of course, we have these other assets out there that include real estate, precious metals, and your own business. Okay, we always talk about that. You've got to be able to tough it out, be a soldier of finance, and maintain. Now, you might have been putting away $500 a month, last year, okay? And now you're only able to do 300, okay? Do what you can. And if it's possible, like I was telling you, I cut down on lattes from 7 days a week at one point to 2 days a week. Look, man, looking at those assets, to me, tastes a lot better than that butter pecan iced latte. Nearly 40% of consumers cannot put any money at all into savings. It's almost half of Americans, according to a recent analysis of household financial health and readiness by the American Consumer Credit Counseling Organization, while about 19% said that they had to reduce savings. So when we look at it, we got about 60% of Americans who have had to reduce savings, and a large number of them they can't do it right now. I understand. Look, if you've got kids, I get it. They got to eat. They're going back to school. Several states have these tax-free holidays where you can get your school supplies and the kids' school clothing with a tax break. So in Maryland, that would be a 6% discount. Guys, check your states out. Definitely take advantage of that if you have the kids that are going back to school. Now, according to this interview, CNBC, it says it may get worse before it gets better. In order to make ends meet, 43% of Americans expect to add to their debt in the next 6 months, especially young adults and parents with young children. According to a separate study by Lending Tree, most will rely on credit card debt to bridge the gap between what they need and what they can afford. Now, see, this is a kind of a trap, because not only are they not going to, some of these people are not going to be able to, afford to purchase assets, but they're going to go out and they're going to stack up these debts on the high interest revolving credit cards. Okay. Thereby making that here's the data with regard to the food inflation in July. Remember, Biden said we didn't have inflation. Well, we had 10.9% food inflation. So if you look at the chart, and you look at, chicken and the increase that chicken experienced in July year over year, and go ahead and add 16% to that if you got to buy that pack of chicken legs and can't afford to pay that off in the 30-day cycle. Then it just became 16% more expensive on average. I'm saying 16% because that's the average, around the average of the interest rate for a credit card in America today. All right, so control that, guys, to the extent that you can. I know things are interesting out there right now, but I want you to come out the other side of this, being able to say, hey, I lived through that, and I came out and I'm prospering based on what happened. The economy is cyclical. Now, I know we're in a funky place right now because these fools won't even declare a recession, which we are in. I mean, all the numbers point in that direction, okay? They're waiting for some special board. I forget their name. I never even heard of them until they started trying to change the definition of inflation. They usually did that. When you look back in history, they usually did that after the fact, like months down the road, they would look back on it. Okay, they don't have a history of calling it on the day because everybody was going with the 2 consecutive quarters of negative GDP growth. And just from a political standpoint, I think it's an insane that the Democrats don't want to go ahead and call this what it is, a recession. And here's why. Midterm elections are in November. So if you go through another quarter, if you have 3 consecutive quarters of negative GDP growth, the third quarter of that negative growth will be announced when? January, February, March, April, May, June, July, August, September, October. And that will be right before the election. So people, if they still try to hold on to this BS about it's not a recession, and we got 3 quarters of negative growth a month before the midterms, then there are going to be a lot of Democrats that pay for that, because it's going to be top of mind at that point when people are watching the news, which I encourage you not to do. The news is trash. Read the newspapers. The Wall Street Journal is a good one. Financial Times is another one. Epoch Times is yet another. And the reason why I'm advocating newspapers as opposed to TV news, because TV news is all about sensationalism and personalities. Okay. Newspapers tend to be able to go in long form. We got a great video on the channel, How to Read the Wall Street Journal. It's I think it's still our most watched video. Check it out. To the extent the news media is not telling the truth and they're playing along with this redefinition of inflation and recession, they're putting you at a disadvantage. That's why I encourage you to step away from that medium and understand the truth of what's going on. All right, speaking of one asset class, we talked briefly about real estate. I want to go in a little deeper, and I want you to watch this video. Mark Cuban is telling you about a type of real estate you should never invest in. And I agree with him 100%. Go ahead and watch that video, guys. I will talk to you soon.